Good morning, afternoon, or evening, ladies and gentlemen, all in crypto here, and welcome back, guys, for another daily cryptocurrency market update. If you are new around here and you're not already subscribed, hopefully you feel the urge to do so after this video. We have so much to cover. And if you guys can give me a like and a comment before we get into things, it really does help me out in regards to the algorithm and promoting this content to a wider audience. So where do we start? Well, I'll outline what we're going to go through in this video. We're going to be looking at the 25 basis point rate hike that Jerome Powell and the Fed did yesterday. Looking at a very short clip of some of the comments that he gave, or one particular comment. Looking at a number of things like inflation. This is the true inflation stats from today that has the CPI data at 3.89. Now, it's a very different story in the UK. Honestly, I feel like I'm a UK citizen. I really genuinely feel like this country is a joke. But that's neither here nor there, just my own personal opinion. We'll look at a number of things. A lot of people have been comparing, and this really should be over here. Where we are now, certainly, they've raised rates over 5% for the first time since 2007. Lots of people were looking at the kind of banking sector. We're going to talk about banking crises because it seems to still be happening. This is PAC West Bancorp. And there's a number of other banks that are getting hit really hard. I don't think the banking crisis is over. I've seen lots and lots of people comparing. They're saying this is way worse than 2008. And what they're looking at is the amount of assets on these banks in terms of the banks that have failed. What people always fail to realize. And if you fail to realize this, it's very questionable, if you understand the whole kind of mechanics of markets. Markets are a liquidity-driven based game, in my opinion. And if you look at 2008, there was roughly, certainly in the US, 1.3-ish trillion in terms of money supply. This is M1. And now, at this point, there's 18. So that's a, 1,200 plus percent increase. So if there's more money, okay, yes, there's been a bigger crash in terms of the assets, but those assets don't hold the same weight that they did in 2008, and it's because there's an inflated supply of money. Milton Friedman did a great piece on inflation. He looked at tobacco when it was legal tender in the US and what happened with goods when everyone started growing tobacco and cottoned onto it. Of course, you had inflation in that sector. Some bullish news from Polygon and also for the general market. But we're going to look at quite a bit. And I want to start things off with looking at Jerome Powell's statements. Now, markets, and the only real concerning thing that came out of yesterday, I think, was the fact that markets didn't react. They didn't, the day finished off green, but it was marginal. We've really highlighted this correlation that everyone's now cottoning onto with gold, this anti-fiat against fiats. There's a lot going on elsewhere that we'll look at. And of course, got non-farm payroll coming up. Jerome Powell has consistently used the labour market to hike. He's saying we've got a strong labour market. We don't see a reason to hike. And whilst that's strong, we don't see a reason, to not hike. Now, I think 25 that they've done is the last one. We've looked at this. We've looked at what happens with the 2-year yields, technically, and then what happens with the Fed funds. Quite often, the 2-year tops, and then they get one more hike, and then it goes sideways. This sideways period is what we want for markets. We see this window of opportunity. I fundamentally disagree with many people out there that are calling for a crash right now. There are more of them than there are of me. We've been battling the bears from 15K to here, just like we were battling the bulls last year. It gets frustrating at times, but listen, everyone's got an opinion. They're totally entitled to it, and the game of markets is a game of buyers and sellers. So I need people to buy off of, and they need people to sell into. And this is kind of how we're going. So I see upside for Bitcoin. We've made this very clear. We don't even have a Bitcoin chart, but we will look at it. Let's just start with a clip of Jerome Powell's statement yesterday.
It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. In addition, the economy is likely to face further headwinds from tighter credit conditions. Credit conditions had already been tightening over the past year or so in response to our policy actions and a softer economic outlook. But the strains that emerged in the banking sector in early March appear to be resulting in even tighter credit conditions for households and businesses. In turn, these tighter credit conditions are likely to weigh on economic activity, hiring, and inflation. the extent of these effects remains uncertain. In light of these uncertain headwinds, along with monetary policy restraint we've put in place, our future policy actions will depend on how events unfold.
I thought, of course he's hawkish, inflation's still at 5%, there's no way he was not going to be hawkish. But I personally feel that was a lot more of a dovish tone than what he's come out with previously. No forward guidance on hikes. He's saying we'll see how the environment plays out. Now we've got the CPI next week on the 10th, I think. This is the true inflation stats. We'll see what we get. Do we get that sticky point for inflation? Go and look at your commodities. Are you in a group? Are you with like-minded individuals that watch all markets? This is not a shill. You do not have to join my Patreon. But I'm telling you right now that the Patreon members that we had probably had a far easier ride yesterday than many, many market participants, because we look at things objectively, we have plans, and ultimately, you know, we know at what point we're invalidated, and that's when we act and change that. And it really is, you know, if you want to find out what I'm buying, where I'm buying, I post everything on there that I've bought. Please do check that link in the description. We have a very good retention rate for people that join and then don't leave. And that's because I genuinely believe that you get value for what you're paying. And also, it's a great learning experience. And we've been very right on the market, keeping people out of it last year and back into it at the start of this year. Thus far, are we going to get things wrong? Of course, I am not. You know, the best thing you can be in front of the markets is humble, because they will humble your ass. But yeah, let's play a little bit more.
In determining the extent to which additional policy firming may be appropriate to return inflation to 2% over time, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. We will make that determination meeting by meeting based on the totality of incoming data and their implications for the outlook for economic activity and inflation. And we are prepared to do more if greater monetary policy restraint is warranted. We remain committed to bringing inflation.
We are prepared to do more. So not thinking about it, but if we need to, we will. Now, he then goes on to talk about the labour market and how, you know, he expects to see this softening. That's a reason for them not to, you know, they want high employment. That's a reason for them not to continue hiking. Friday, we get that. It's non-farm payroll. I'll be looking at that. And of course, those stats are going to move the markets, because if you get a weak number, it's likely that they're going to back off from the rate hike and we're going to stay where we are. This is the opportunity that we've been waiting for. We want sideways rates. Go and look what happens to the markets under sideways rates. We've done it all. I don't see other people doing this kind of analysis. And I'm not going to go into the caliber, because I've had a few comments on how it's very annoying that I do this. Go into the caliber of Twitter and YouTube analyzers. It's pathetic, but anyway. This is the true inflationary stats for the US. UK, again, the UK is a joke. Seriously, I'm at this point, it's laughable, right? How the UK is being ran and governed. And this is, you know, 15.7% inflation, government reporting 10. This, of course, is the US. What would you do if next week we get a 3.89% inflation? What do you think the markets do? And then this is when everyone goes, oh, we were bullish the whole time. No, you weren't. One of the few people bullish from literally the start of January, the 5th of January. And if you want to join my Patreon, go and look at that video. You'll be pleasantly surprised. Doesn't mean we're geniuses, but it just means that we pay attention and do a lot of cross-market analysis. And ultimately, I'm determined on here and within the Patreon to help you guys navigate what is the hardest environment that I've ever come against in terms of certainty on things, but also, you know, a very volatile and still small and speculative space. Looks like we've got more banking issues, and this was after they all came out yesterday and said the banking sector is sound. This is PacWest Bancorp. I saw people on Twitter like, this is the beginning of the end, and I'm like, oh, well, you know, doom sells, you know, fear something sells, you know, and I can see why people do that, but put this into context, you know, and if all the banks did fail, what happens? Well, do the US just allow that to happen, or do they print a load of money? And then do we see sky-high inflation again, and then do all your assets go through the moon? You know, there's two sides to every single story, and if you're paralyzed in this state of fear with the markets because you're waiting for a crash that may or may not come. It may be 12 months down the line. It may be 24 months down the line. Maybe 30-something months down the line. It might be 8. But if you're paralyzed up until that point because you're so scared that the market's going to crash and you're sure, and check your reasoning. You have to have reasoning to why you think things are going to happen. And just because someone else said it, and there's lots of bears right now, doesn't mean that that's going to take place. And I support the bears. I support anybody who's brave enough to put their opinion out there on the markets, because trying to predict the markets is not the easiest thing in the world. But I just happen to disagree with you. So Bank West Corp, imminent demise, shows bank turmoil is widening to smaller banks. Yep, smaller banks have been hit with deposit withdrawals that have gone into larger banks. There's this whole speculative narrative about the fact that this is all planned by the Fed and so on and so forth. But you can see these bad boys. Let's see what happened yesterday. Let's get a daily candle up. Right, where actually is? So, the daily. You know, at one point this was 49% down. And this since March. This has been an issue for a while, but people only pick up when it suits them. You know, at one point was down 81%. That is not healthy. People think crypto is speculative. Well, you know, it is, but the banking sector at certain times, and what we find out, and we looked at a clip of this yesterday, is when things are going up, things are liquid. When they're coming down, they're not so liquid. You are going to get more bank failings, very likely, under the pressures of high interest rates. We'll see what happens. The pre-market has got this at 3 point... Oh, bloody hell. 3.9. That's looking for more downside. How's this going to shape things? Well, we've seen anti-fiat, crypto, and gold do quite well. Gold is approaching all new time highs. They don't want to talk about this, the bears. The dollar getting smashed. Dollar's at a key level. Look at it. I wouldn't short the dollar here just because you're at support, but if it does roll, it really does roll. And you've got this kind of beautiful pattern with Bitcoin where you're kind of both doing, you know, you've got this like crossing of the fiat and the anti-fiat. And I think Bitcoin's destined for higher highs. Stock market is very much a mixed bag. And there's a lot more correlation with gold than Bitcoin. You can see this is continuing to fall, marginally higher high. You had a bearish divergence on that. We'll see what happens. Does it pick its feet up, do something like a double bottom here, and then see that continuation? I think the stock market is a harder market to play actually than the crypto market or even the FX market at the moment. We've got Apple earnings, so we'll see what that brings. That's going to be a big one. Apple makes up a large part of the S&P. And of course, Bitcoin. We know the score for Bitcoin. You know, I think personally, before you have a larger correction, I think a larger correction is coming, but I think you're going to do this in a 3 impulsive fashion. And you're probably going to hit our 25k non-log target for the head and shoulders before you do maybe something like that and then see that continuation. I do not believe the demand destructive event is coming just yet. I think that ultimately we've looked at the yield curve. We've looked at a million things. We've shown you this technically. We've given you reasons for it. We've not just said, oh, we're scared and we think a crash is going to take place. You know, when everyone thinks that, and there's reason to think of it, look at what's going on. I'm not saying that people are idiots for thinking that. It usually doesn't happen. Who are you? Are you Michael Burry right now? Or are you, and I don't mean using him in the short analysis, I mean him going against the grain. Are you Michael Burry saying, actually, you know, a crash we don't think is going to come? What we're saying just yet, could be 12, 24 months down the line, that you've got this window of opportunity if rates going sideways. Or are you everyone going, oh, you know, I mean, Jim Cramer's calling for a crash. You know, whose side are you on? And I think it's very interesting that people are comparing 2008 with now in regards to banking, because if you look at the amount of money that got caught up in 2008, we've outdone that today with the recent #banking crisis. However, look at the money supply and what's happened. It's explainable. It's like, you know, why did markets rally from March 2020 onwards? Because of the money supply, you know. And if you don't think that inflation is a monetary phenomenon, please go and do some research on it. Go and look at Milton Friedman's video on the tobacco industry and how, or not the tobacco industry, that you could buy goods and services. It was legal tender at one point in the US. And then everyone started to grow it. And what happened to those goods? Well, your one tobacco leaf got you 1/5 of what it once did, or 1/10, and then so on and so forth. And if you look at across the board, you know, there's many comparables and things to look at. Derivatives protocol, SYN Futures. Public beta V2 will go live on Polygon. This is the future, guys. Everything is going to be tokenized. The derivatives market, which is hundreds of trillions of dollars, the property market, everything will be tokenized. And blockchain will be the very thing that tokenizes it and runs it and secures it. And we're now looking in the Patreon at certain areas that we think are going to do very well. And we will be coming out with those soon. So that's all I've got for you guys. It's non-farm payroll tomorrow. Tomorrow. Remember that this has a bearing on everything. Main market for me that I spend a lot of time looking at is the yields. Yields slightly up today. Yields at this crucial point. I want the yields to roll because I think that does well for us. But what I want, you don't always get in the markets. Not done a lot of FX looking at recently. US dollar not doing too well against the euro. Not doing too well against the pound. We did have a bounce there, but it's gone on to put in lows. You're at these kind of key levels for many of these though. But we can report on all this at a later date. So that's really all I've got for you guys. We're ultimately bullish on the markets over the next year. Have been since the start of the year. We've been right thus far. Whether we continue to be so or not will be decided by the markets, not me. And on that note, I'm going to love and leave you. If you enjoyed the content, like us, always appreciate it. So as a comment. Catch you all in the next one, guys. Thank you.